Yeah, the S&P almost positive right now, down a fraction of a point. As Treasury Secretary Steven Mnuchin gets ready to huddle with GOP leaders to discuss tax reform, French bank Societe Generale says there's a looming black swan event on the horizon. Black swan, by the way, is not a good thing. Team Trump. Here it is, that Team Trump might fail to deliver on promised tax cuts, and that will be the biggest black swan risk for global markets. In a Fox Business exclusive, one of the world's greatest money minds joining us now, Allianz Chief Economic Advisor Mohamed El-Erian. Mohamed, what do you think right now is the biggest black swan for a market that is brushing up against record highs nearly every day?
So I do not think it's what Societe Generale says, in the sense that failure to pass tax reform and other pro-growth policies are already priced in to this market. You need only look at how the internals of the markets have changed. This is no longer a Trump rally based on policy expectations. This is a liquidity rally with a bit of reflation hope globally. So I don't see this as the black swan. If you want to look for a black swan, it's more likely to come from a geopolitical shock or from something going terribly wrong in Europe.
We've seen a couple of, I guess, what I might consider geopolitical shocks, and that's North Korea testing missiles. Some of them failed, some of them succeeded. What else? I mean, we've been watching the battle with ISIS for quite some time. Can you imagine what might be a geopolitical shock strong enough to derail the markets?
So if North Korea went from testing missiles to actually attacking either Japan, South Korea, or even trying to get to the U.S. territories with a missile, that would be a black swan. What I see right now in North Korea has been quite contained. The black swan would be if they actually attack a neighboring country.
Last we spoke, and we've spoken between now and past January, but in January you had about 30% of the portfolio in cash. What do you have now?
So I think this has been a rotation time. So we also spoke at that time about less financial, fewer industrials, and much more tech names, and much more of the lagging sectors, particularly emerging markets. That has worked really well because, as I said earlier, the leadership of the stock markets around the world has changed from the U.S. to the rest of the world, and from within the U.S. to tech. Now, my view is fewer dollars, but take more risk with those dollars. So I would continue to look for lagging sectors, but I would put fewer dollars at risk at this stage of the rally.
Very interesting. So take a little bit of what you have as dry powder and put it into the risky names. Mohamed, great to see you. Please come back once again.
Thank you.
Mohamed El-Erian in a Fox Business exclusive saying, no, it's not whether we see tax reform, it's whether we have a geopolitical trauma. Markets down for the day, but up for the month of May. There's the closing bell.